This is Energy Perspectives, a weekly podcast produced in Guyana that delves into the developments unfolding in the world's fastest growing economy.
Hello and welcome to Energy Perspectives. With over 105 companies already confirmed, the momentum is building for the region's premier energy event right here in one of the world's fastest growing economies. Join us on February 17th to the 20th, 2026 at the Guyana Marriott Hotel in Georgetown for the Guyana Energy Conference and Supply Chain Expo under the theme Building Tomorrow's Future Today. The focus for the conference will be on real solutions for sustainable growth, digital transformation, and resilient economies. As we count down to the Energy Expo, we are very pleased to have join us on Energy Perspectives today Eyberg, Head of Global Gas and Power Consulting at S&P Global. He advises energy leaders worldwide on gas, LNG, and power, and is known for seeing the big picture clearly. We want to start the conversation today on energy perspectives with the big picture. Eric, from your vantage point at S&P Global, what is the single biggest force that's reshaping global gas and power markets right now?
Well, thanks, Michelle, and thanks for having me here. I'm really excited about being in Georgetown in February. A single force, it's hard to come up with a single, but I think there may be a couple of key forces that we're seeing that are shaping global gas and power in 2026. And first, I'd probably start with geopolitics. Disruption has become the new norm for just about everyone in the world. Last week, an example of that is we had a very cold northern hemisphere week, and that strained the energy system. Very strong call on natural gas across the world, and we got very close to some reliability issues. To then thinking a little bit differently, and we're remaking the world's international bodies, WTO, WHO, amongst others. And so I think we've seen the geopolitical shift from more global interdependent to more regional transactional. And what does that mean for gas and power? Energy security is primordial. Of course, access to reliable and affordable energy becomes even more important relative to global initiatives such as climate. And then I'd say, on the back of that geopolitical reality we have, there's one other really key driver that we're seeing for 2026, and that's already happened in 2025, which is that we've had a big boost in global energy demand due to data centers and AI and also large loads. And this is particularly in stagnant markets such as the US, Europe, and Japan, but it's also turbocharging growth in Asia. Yes, renewables are going to grow and continue to grow, but technology advancement and economic challenges have certainly been challenging, and the supply chain is struggling to keep up. So the notion that we're going toward an energy transition, we like to say that it's more of an energy addition at this point, and an all of the above energy approach, which says that hydrocarbons are going to be here for a long time. Multiple decades, we are going to need hydrocarbons. Peak oil keeps moving out. Every time we put together a new forecast for S&P, we see that happening. And I think I looked at our latest global oil forecast, and in 2050, we have our forecast demand in our base case at more than 90% of today's levels. So really not a huge shift in the next 2+ decades. And natural gas is a really big winner here in this story. It's the most resilient hydrocarbon, and with that growing call on energy as a whole writ large, natural gas plays that role, but also provides a lower carbon footprint. So again, a really good story for natural gas, and really the geopolitics and the intersection with energy and what we're seeing on the growing energy demand phenomena that we didn't have over the last 10 years or so, especially in those mature markets, has really reshaped what we're seeing.
So natural gas, Eric, it remains it remains part of the long-term energy mix. So is the role going to narrow at any point?
Yeah, so I mean, I think, our view for natural gas is we now see growth late into the 2040s. And that's, just to give some ideas of size, we're talking about a 400 BCF a day market today growing to over 450 BCF a day in the late 2040s at its peak. It's really led by China the next decade, and then you start to look at Southeast Asia, Middle East, also Latin America and Africa to a lesser extent. In those regions, you see gas playing more of a destination fuel role versus what you see in Europe, for example, it's more of a transition role. The big shift has been in a place like North America, where we always, and I think any analyst and any industry participant had seen or had a view of natural gas demand as reaching peak next year. It was always next year, and then declining thereafter. And now, for the first time, we're seeing a growth story out of North America. So no longer that gas is a transition fuel discussion, but more of, it's a destination fuel. So there's been a shift. However, of course, at S&P, scenarios are really important. So we always take the scenarios-based views. That's our base case. Our base case would say gas is a destination fuel for many parts of the world. It's a transition fuel for other parts of the world. At the end of the day, our view on the energy transition is that it's multidimensional. Countries have different paths. In other scenarios that we have, such as our Renaissance scenario that we put out, which is a more accelerated energy transition driven by emerging economies, you see a different view. It's more of gas serving the role as a transition fuel once you get into the mid 2030s to 2040 and beyond. So it really depends upon the assumptions of what happens around geopolitics. Do we go back more toward a global consensus-based view on climate change and climate policy, and really shifting back toward the transition instead of the energy addition scenario? So I think a lot will depend upon how it all plays out. But I think the one outlier to all of that is LNG. And so while gas demand has modest growth moving forward and grows into the 2040s, LNG, in our view, grows throughout. And LNG even grows in our more accelerated energy transition scenarios. And that's because if you look at the global gas footprint, there are few places with lots of natural gas resource that's abundant and that's relatively low cost, and connecting those to markets that are increasingly lack or have a lack of gas supply and energy supply access means that LNG and its ability to connect reliable energy to those countries in need of energy supply plays a really key role. So LNG is a growth story across almost every scenario.
Right. And as we look to the next decade, Eric, where does gas demand really hold up? Is it power generation industry, or is it somewhere else?
Yeah, so I mean, gas for power remains the leading growth sector in our views. It gets a lot of the headlines, of course, because we're hearing constantly about AI, data centers. What's the requirement for power? Renewables can't pick up enough load. Nuclear is too far out. Natural gas is the solution. So we hear a lot about that. But actually, in our base case view, the growth from the power sector and the industrial sector is about the same. And what I would say is the industrial sector is more resilient and more stable across scenarios. Of course, in the more accelerated energy transition scenarios, it's power where most of the change occurs rather than the harder to decarbonize industrial sectors. So natural gas actually has almost as strong a growth in the industrial sector relative to power.
All right. This is Energy Perspectives. Our guest today is Eric Eyberg, Head of Global Gas and Power at S&P Global. We want to turn to America's role now, Eric. And when we look at the Americas today, is the story more about supplying local markets, or are we talking exporting to the world?
Sure. I think, again, from a perspective of what makes the most noise, certainly we hear a lot about exports. We hear a lot about LNG, whether it's Argentina, Suriname, potentially Guyana. Mexico, when we think about Latin America, we hear less about pipeline gas integration and energy integration across countries. But interestingly, when you kind of add up all of the growth that we expect from both exports, energy exports, and domestic, or let's call it regional integration across countries, it's actually regional integration that's larger. We have LNG growth in Argentina. We have some in Suriname in our outlook. It's maybe 10 million tons, maybe as much as 15 million or 20 million tons max. That's one or two, maybe even 3 BCF a day equivalent. If you look at just Mexico's imports from the United States via pipeline, that's 4 BCF a day of growth alone. So just that one integration play is larger than all the LNG that we expect to come from Latin America from a growth perspective. Then you add in pipeline from Argentina through Bolivia to Brazil. You add in also regional integration via LNG, so LNG being produced in the region and then imported into places like Colombia and Brazil, also Argentina in the winter, Chile, areas in the Caribbean. Then actually the regional integration play is actually much larger than just the export it to the rest of the global market.
All right. And speaking of market, let's talk about the Guyana-Suriname Basin and what really makes it so attractive right now from a market perspective.
Yeah, Michelle, I think first is the Guyana-Suriname Basin has an incredibly competitive, low-cost, massive, high-quality oil resource base. And so we're talking about light sweet crude oil in Guyana. Somewhere around 11 billion barrels of recoverable oil is what we have now, and we know that's only going to continue to grow. The break-evens of that, when we've done our analysis at S&P, is the large majority breaks even below $60 a barrel, and actually half of that breaks even below $40 a barrel. So it's very competitive with other resources across the world, in particular deep water resources. The other thing that we would say, of course, is certainly the partnership model that stimulated the investment to drill exploration wells in Guyana was really critical, also Suriname. And actually, there's a lot of people who would say in the oil and gas industry that Guyana wouldn't have been discovered if the terms weren't so attractive. So that certainly played a role. If you had a lot more onerous terms, then it would be hard to see the oil and gas industry taking the risk. The other thing that I wanted to point out, or I'd like to point out for Guyana's oil fields, is that they have world-class emissions profiles. So when you look at emissions intensity of Guyana's oil, we estimate that they're under 10 kilograms per CO2 equivalent per marketable barrel. That's comparable to some of the best and cleanest barrels that we find around the world, for example, in the North Sea or in the US Gulf of Mexico. And if you looked at the whole curve, you would see on the very low end is where Guyana sits. So that certainly is a positive. And if you think about longevity of oil production and competitiveness in a potentially shifting world, and where certainly emissions and climate initiatives take precedence further out in time, Guyana is really well positioned there. And then third is there's gas, right? So of course, I'm focused on gas and power, so I'm always more keen on the gas side of the equation. But the gas is both associated gas with that oil production, but also non-associated. And Guyana alone has more than 18 TCF of recoverable gas resource. And the associated gas can certainly serve local market requirements and power needs, but also to help industrialize in the country. And the non-associated gas could turn into big export projects. There still has to be a lot of work done. There is an FID pending for Suriname's Block 52. They've taken, or at least they've established commerciality of the field, but next is to take final investment decision. And then on the Guyana side, certainly the Haimara fields that are being developed by Exxon and their partners is another opportunity. There's still work that needs to be done on appraisal, but those are potential candidates for large-scale export projects. So having the ability to have both associated and non-associated gas is also a positive for the Guyana-Suriname Basin.
We're going to spend some time on our podcast now, Eric, talking about Guyana's energy strategy. And we can't talk about the strategy without talking about the highly touted gas to energy project, the gas to energy project. But we also want to talk about the power sector risks and competing for investment in this part of, or in this segment of the podcast. So the GTE, gas to energy project, it has to succeed, Eric. What absolutely has to go right?
To us, it's all about aligning the value chains. And the GTE project in Wales, it's a 300 megawatt gas-fired power plant. Getting the gas to the facility is probably the easiest thing to do. The pipeline is largely built, and so that's a little bit less of a bottleneck. It's really ensuring that the power can be effectively and efficiently distributed across the country. That's really critical path. So developing the distribution and transmission network that will help to support realizing the full potential of the power plant. You can't just turn on a 300 megawatt power plant on full capacity overnight. It's going to be ramped up over time, depending upon that connectivity to the rest of the system. The 300 megawatts that the facility has is actually larger than the entire peak demand of Guyana. So it's built oversized, knowing that the country's power demand growth is effectively tied to GDP growth and what's happening in the oil and gas sector in Guyana, and so that's increasing significantly. So it's oversized, and so again, making sure that that power can be transmitted around the country is a really important one. The other parts of the value chain that are really important as well is you have, of course, the processing plant. And so the processing plant is going to have associated natural gas liquids, and in particular LPG, that can be used to provide additional energy access to the country. And so using LPG locally and substituting out diesel or other fuels, or where there weren't fuels available. And then secondly, exporting the rest of the remnant of that LPG to the global market, you have to put into place infrastructure. And so that's something that's also important in critical path. Not as important as ensuring that the power can get around the country, but certainly another important factor. And then there's an opportunity to use a portion of the gas and liquefy it, and then use small scale micro LNG to also ensure that energy can be spread around to the country and access can be given to more isolated communities, or also more isolated industrial or commercial demand needs. And so building that infrastructure is important. So it really becomes a question of infrastructure, and of course on both the gas and power and LPG sides. So that's really, from our perspective, what will enable the timelines to be kept and get energy to the people as fast as possible.
While we get very excited about gas to energy, there's been a lot of talk about what may not go right. What are some of the power sector risks that may have occurred in other countries that Guyana cannot afford to have those happen here?
Sure. I think the good news is that gas to power is usually, if you look at countries all over the world who are in a similar situation as Guyana and trying to determine what's the best use of available natural gas, power is usually number one, because an economy really can't advance unless it has access to cheap, reliable power. And so this is a great opportunity, and Guyana is following, certainly those lessons learned very well by focusing on the power project as the first opportunity. But other countries that are similar to Guyana have gone through challenges around exactly what we just talked about, the distribution and transmission network and connectivity of that power to the grid. And so in many cases, if you have a country like Guyana where you're heavily reliant on fuel oil, diesel, small generation sets, in different locations, relatively dispersed around the country, it is, really becomes extremely important to ensure that that distribution and transmission network is built out and ready to go early on in the life of the project to ensure that power can stream around the country. So that's one thing in terms of where we've seen other countries go through challenges in developing power for gas solutions. The other is really planning that maintenance of the system as well, because while Guyana does have a distribution and transmission network, investments do need to be made in order to increase the voltage, to increase the ability to send additional power. It's a very different setup when you have, let's call it 30 or 40 power plants in the country that are generating at an average of maybe 20 or 30 megawatts maximum for those power plants versus one 300 megawatt power plant all in the same place. And so really ensuring that the grid is maintained is important as well. And then last that I would bring up is countries really struggle with planning and having a holistic view of the energy space, developing a gas master plan and ultimately an energy strategy that's consistent with the LCDS, the low carbon development strategy that Guyana has developed, that is realistic, becomes extremely important. Because imagine if you have a certain amount of gas available and you think you have a power curve that looks like this, when in reality it's going to look like this. You think you need a lot more natural gas for power than you do, and then you don't invest in other uses for that natural gas that could be accretive and incremental to the economy, help to industrialize, help to create more jobs. And so really the planning side becomes extremely important. And we've seen a lot of countries go for a while. Trinidad and Tobago is a great example, not specifically on power only, but from a gas sector perspective, struggled for a decade and then developed their gas master plan, made a number of recommendations to help to provide or re-energize the sector. And just now, we're starting to see the impact of that re-energizing of the sector, but it took a decade. And so really having that kind of holistic planning perspective becomes very, very important. And that really integrated gas, power, and energy strategy.
And that is why the Guyana Energy Conference and Supply Chain Expo is so important, bringing all of the moving parts together for a very clear assessment and review to see where we're going in that regard. We had the Berbice Development Summit, which is connected to the energy story here in Guyana. But earlier, Eric, you mentioned that perhaps the primary objective in our energy strategy is to ensure adequate power across Guyana. That means all 10 of our administrative regions. But we're also going to be competing for global energy capital. In this regard, how should we stand out? What are we prioritizing so that Guyana stands out?
Sure. Well, I was actually in a very different part of the world last week and helping another country think about building out its gas strategy, Libya. And those very questions were being asked there. How do we compete globally for capital? And Libya is an interesting and somewhat similar story to Guyana. Big oil resource base, low cost, competitive, also associated gas, also non-associated gas, close to Europe. And guess what was number one? Number one was power. And so how to make sure that, yes, you have to make sure that the power sector is adequately fed and the planning is appropriate, and you do allocate enough natural gas to substitute out oil, diesel, and fuel oil generation for a number of reasons. But number one, because you don't want to have to import products, and also you don't want to impede oil exports, which create a lot more value versus using natural gas. So making the GTE successful is number one. And I know we've said a lot about that already on this discussion, but that becomes number one. And certainly Libya, it's the same story. They needed to make sure that they can substitute out what's now 30% of their generation, and that's oil and products, with natural gas. It's also cleaner, but it also unleashes the opportunity for more value to be created by the exports. But just as important is that having that access, as we talked about earlier, to lower electricity prices then opens up the economy for a number of opportunities. And so certainly, unlocking the gas to power opportunity is extremely important. Also, that helps to unlock those downstream opportunities. So whether it's fertilizers or whether it's looking at petrochemicals or whether it's looking at other opportunities downstream, certainly having the access to lower cost energy is going to be important to be competitive. And then we would say generally, if you look at how do you compete globally, having institutional and regulatory consistency is primordial. That's extremely important. Guyana's been working very hard on this, but there's still more to do. From a gas sector perspective, the regulatory framework is nascent, and it should be, because the gas industry is just starting in Guyana. But it's then how do you create an agile regulatory framework that accompanies the growth of the industry and the maturity of the industry over time? That becomes extremely important. And then ultimately, that then goes into financing. And so how to attract multinational and regional financing and create those conditions. Yes, the institutions and the regulations are a very important factor there. And also, of course, how do you ensure that Guyana is in position to attract that investment and that financing? That becomes extremely important. And Guyana, the country and the various government agencies play a role in order to help facilitate that investment. So that all kind of comes down from electricity costs, but then also institutions, regulations, and then financing in the end.
And I know that you're going to be back physically in Guyana come February next year, Eric. But you were here earlier this year, and of course you're on top of all things happening in Guyana. In a very general sense, based on your comments, though, how have we done? How have we been doing in 2025 on in this regard? From your point of view, as I said, you advise energy leaders on gas and power and LNG and so on, but just tracking what has been happening in Guyana for this year alone. How have we been doing?
I think there's a lot of excitement. I think that going back to the consistency in terms of regulatory, institutional, but also political, certainly that's been very positive for the country. And I think secondly, what I would say is I did see that the first turbine is being put into the ground. I saw that yesterday. So I think that's certainly a sign of progress on the GTE, which, as we know, is extremely critical. And I keep seeing more and more announcements about additional developments. I think that's all very critical as well. Having obviously, others looking at the opportunity set across Guyana is important. I've seen it myself. Just coming to the country a few times in 2024, a few times in 2025, where I noticed that infrastructure was improving across the country, and not only roads, but also schools, hospitals, hotels. And I think all of that is indicative of the country is growing, the country is accompanying that growth and building out that infrastructure that's needed. While also investing in the country and investing in things that people can see tangibly. So I feel like Guyana is doing a really good job in 2025, and excited to see what happens once the GTE ramps up next year.
All right. And we're almost at the end of our conversation time on this podcast, but we're certainly going to be hearing from you more at the Guyana Energy Conference come February. But from now until then, Eric, if you had to and I know that you will continue to give our leaders here, just guidance for our energy strategy. As we wrap up 2025, what would some of those, general thoughts be to our policymakers?
Sure. I think first is Guyana should focus on, when we just think about gas, should really focus on a gas strategy that balances the competitive advantages and economics with national priorities. National priorities include investment, jobs, the multiplier effect that comes to the economy from various decisions around what to do with the natural gas. It's avoiding an all eggs in one basket approach. It's not only focusing on GTE or only focusing on exports. It's really pursuing a balance of export-driven and domestic-driven opportunities. And also, I think importantly, not just raw materials, because then that helps build out the economy. But there's a few things that I would say that Guyana needs to get right. And one of those is ensure that gas supply is available. That's the first step. And so certainly helping to facilitate and advance further appraisal, working together with the upstream partners on utilization studies, that's really critical for Guyana. Second is, how do you manage those risks that inevitably will come? And considering how to create favorable terms to attract investment for infrastructure, to attract financing, developing, as we talked about a little earlier, the right-sized regulatory framework for where Guyana is in terms of developing its gas market and gas industry. And then, I think for the kind of upside potential, it's already assuming that you're going toward that upside potential and trying to unlock even more than maybe what we may have line of sight on in terms of what's available from the natural gas sector. And there it's really focusing on that non-associated gas field appraisal and strategy, and also the cross-border development potential with Suriname, scaling up infrastructure, thinking about those big projects. And we've done some work around this and have a lot of thoughts for Guyana, and it's really phasing it all out, but building out what we would call a realistic but aspirational view of what's possible, and then developing actions around those and phasing it. Really, first phase is focused on the GTE and commercializing those LPGs that are associated with it. Some quick wins for getting energy to the people, getting energy to industry and commercials. The second is really maximizing flows, finding more gas to fill up the GTE pipeline, and a mix of both power and industry solutions to create jobs and ensure to keep those electricity prices as competitive as possible. And then third is really expanding beyond the constraints of the GTE, going after bigger, large-scale opportunities and potentially exports. And so it's exciting to watch this pan out, and was exciting to be there this year, and looking forward to February 17th to 20th next year, and participating with all of the various stakeholders, and hoping to hear all about the great progress Guyana's made.
Thank you for listening to the Guyana Energy Perspectives podcast. Listen to us on Spotify, Apple, or wherever you get your podcasts.